Hello, and welcome to Your Money 2.0. I'm Thomas Fox, Community Outreach Director of Cambridge Credit Counseling. If you're like me, you find no pleasure in shopping around for car insurance. The process can be mind-numbing, confusing, and downright annoying, but it's something you have to deal with if the state you live in requires that you carry an automobile policy. So if you're going to put the time and energy into shopping around, you might as well do so armed with the knowledge that can help you save some money. We did a little digging and found some interesting things that can affect your premiums, some of which may shock you. These days, almost all insurers take a look at your credit report before extending coverage to you. Although some states have rules that prohibit the practice, many states allow it, much to the dismay of consumer advocates. What does your score have to say about your driving? It's very simple. Studies have shown that people with lower scores are more likely to file a claim. Because insurance companies are risk-based businesses and would rather take in more money than they pay out, this makes sense. The credit score also tells your insurer a little bit about your stability. The logic here is if that your credit is in good shape, so are your faculties, reducing the likelihood that you're driving around like Burt Reynolds and Smokey and Bandit. The insurance company's perception ultimately is that if you pay your bills in a timely fashion and have had the same credit accounts for a long time, you're less of a risk than someone who pays late and frequently opens and closes accounts. The information in your credit profile is used to create your insurance risk score, which is one factor that can determine your auto insurance rate. Unfortunately, your insurance risk score is not available to you, but it may be similar to your credit score. If your credit score is low, but you're a good driver, you may find a better rate with a company that weighs other factors more heavily, such as your driving record. You can find such a company by contacting an independent insurance agent or your state's Department of Insurance. Now, some of you may be saying, hey, I don't make any late payments, so I should be okay. Well, that may not be the case. Credit score issues don't just affect people with payment problems. Even borrowers with good credit can see their scores drop if they have multiple credit inquiries, carry too much debt, have their credit limits reduced by their lenders, or have errors on their credit report. Just like the experts say, you should examine your credit reports at least once each year to make sure the information contained in them is accurate. If your credit rating decreases right before your auto insurance renews and your insurance company takes the new rating into account, the lower scores could mean a higher premium. On the other hand, if your credit scores have improved since you purchased an auto policy, you may find a better rate with an insurance company that considers credit scores when determining rates. You should also be aware that your automobile model affects your premium. According to MSN, you won't get these numbers from your insurer. In fact, you may not be able to get them at all. But the auto insurers do have a rating system for every car make and model. Most use a system devised by the Insurance Services Office, which starts with the cost of the vehicle and then factors in safety and theft data. Cars are given a rating from 1 to 27, and the higher the number, the higher your premium. Now, you may already know that bad driving can raise your premiums, but the amount of the potential increase may make you focus on the road like never before. The industry standard increase to your premium after your first at-fault accident is 40% of the insurer's base rate. So if your base rate is $1,000, you can receive an increase of $400 after your first accident. Not every insurer has this policy, and 40% is just an average. The bottom line is that in the majority of cases, your rates will go up. What can you do beyond avoiding accidents? When you shop for a policy, be on the lookout for companies that have an accident forgiveness policy. You'll have to qualify for the coverage, so be sure to ask about the requirements. Well, that's it for this edition. As always, we welcome your feedback and ask for your thoughts and suggestions by emailing us at yourmoney2@cambridgecredit.org. Thank you for watching. Until next time, I'm Thomas Fox for Cambridge Credit Counseling.